If I had to start investing again as a beginner, there's a lot of things that I would change. In fact, when I think about it, there's 7 key elements that would have made my financial situation much more successful. And my investment portfolio, rather than being at 200,000, would be more like 4 to 500,000. So I want to share with you what these are. There's a combination of investing tips, but also a much stronger emphasis on mindset, which I think is very overlooked when it comes to investing and using your time efficiently. A huge thank you to XTB for sponsoring today's video, but more on that later. Now, I think of these steps as equally important, but we'll build up to what I think would have had the most impact and made me way more money. My hope is that by sharing these, you will be able to take some of this advice on board earlier and be much more successful than me. The first is tax efficiency, and this is where I think a lot of you may be going wrong, and I definitely was. So when I first started investing at 18, my goal was to put money into a stocks and shares ISA. My goal at the time was just to save money, whether it be for a house or retirement. All I knew was I wanted my money to be in a tax-safe wrapper away from the evil government. Jokes aside, I felt probably like most of you feel. By the time I retire, I'll have paid tax all my life, so the last thing I want to be doing is paying tax in retirement. I also, being self-employed, felt that an ISA was a much more bigger safety net than a pension. If something goes wrong with a business, I can survive on my ISA, or at least for a certain amount of years. At 26, I then took 100,000 out of my ISA to pay for my house deposit, essentially wiping my ISA balance to zero, which, trust me, was extremely painful. If I'd have had a flexible ISA, I would have had the possibility to put the money back in. Instead, having sold my property over the past 3 years, I've been left with it in cash, which isn't ideal. While I don't think opening an ISA was a bad decision, I completely overlooked the tax-efficient benefits of having a pension. What I should have done is opened a pension and split my money between both. You are taxed on income eventually you take from a pension or a SIP when you retire, but what I overlooked was 2 things. First is when you retire, you'll pay less tax anyway, because you're not earning a normal income. You have your basic tax rate, and you also have an option to take 25% lump sum, which you don't pay tax on. And second, the extra boost you get from the government now, which is essentially the money you would be paying in tax anyway if you're putting it into an ISA, is a huge benefit, because it compounds over time and it becomes worth a lot more. The earlier you deposit and that bonus gets going, the better. While on the surface of it, it looks like a no-brainer. If you had £500,000 in an ISA for retirement or £500,000 in a pension account, the ISA is a no-brainer. But what you miss is that if you contributed the same amount to different accounts, the ISA would be at 500,000, while a SIP would be more like 800,000 plus, which is a huge difference. And this brings me on to point number 2 of what I would do differently is work backwards. After 16 years of working towards financial independence, I can 100% say this is the way you should do it. First, get your retirement sorted. Make sure whatever the state age is by the time you retire, be it 58 or 68, you have enough money. If you're self-employed, pay into a SIP. If you're employed, make sure you really work out what your work pension is going to give you. Max whatever your employer will pay in and explore salary sacrifice. You'll quite possibly find that what they'll pay you in retirement is not what you want. If it isn't what you want, explore a SIP so you can get to the number you want in your retirement. Then your goal should be your ISA. The best way to think of an ISA is either towards a house or used for a rainy day, or it should be essentially to buy years retiring early. For example, if you had 100,000 and you needed 25k per year, that's 4 years retiring early, and go from there. What this does cause though, especially for me, is number 3, which is obsession. Now, it might surprise you to hear me say this, but I don't think my mental health when it comes to money is particularly healthy. For example, this year, I've been contemplating not paying into my ISA, which really pains me to say, as financially, it would relieve pressure for me. I'm wanting to move house, I have huge tax bills to pay, and I've travelled this year and achieved some huge life goals. So, it would make sense. The problem is, in my mind, I think, well, 20,000 in my ISA this year means possibly 2 to 3 years of me retiring sooner, which constantly puts me in this mindset of living for the future. And this is where I think investing can become very detrimental and something that I don't think is talked about enough. In retrospect, is not traveling now worth having a few extra thousand when I'm 70? Or will I look back at life and think about the things I missed out on because I was so obsessed with saving? And I 100% did this through my 20s. While I travelled more than most. I turned down trips to Asia, all of Europe, Australia, because of not wanting to spend money, which was actually pretty stupid, especially in my early 20s. The pressure, I feel, doesn't stop coming as you get older. Now, the pension limit this year is £60,000 and the ISA limit is £20,000. I find myself wanting to fill both of these, which is completely unrealistic and not something I can ever afford to do. But I feel harsh on myself that I can't, which is completely silly. For the majority of people, filling £20,000 into an ISA is completely unrealistic. Amazing if you've been able to achieve it, but it's a weirdly positive and detrimental goal. In hindsight, I would have much rather worked it all out. I would have put X into my ISA, Y into my SIP, and Z would have been for enjoying life while I'm young. I feel like it's so important to get that balance right earlier in your life, and I hope this does resonate. If you ever want to talk about any of the issues you're going through, I'm always here. Just reach out to me, as I'm really happy to talk to anyone. The next thing that can really help with this is having less distractions, and the main thing that helps with this is averaging in. What I mean by this is adding a set amount to your investments each month, set and forget, come back in 20 years and see the nice results. This really helps in 3 huge ways. The first is it stops you from obsessively checking your accounts, like it will actually make a difference the more you look at it. The second is it will make you take advantage of times when the market is down and not try to time the market. It's always good to be able to buy more when it's down and not waiting for the next time you are able to lump a big amount in. So if you do look, despite what the market does, your balance will keep rising. I've noticed a significant impact in my mindset when it comes to my SIP versus my ISA because every month I'm adding more, despite what the market does, which has been a huge mental boost because I can always see it going up. Before I continue, I want to say a huge thank you to XTB for sponsoring today's video. XTB is a very nice detailed trading platform which has just added stocks and ETFs. It's perfect for anyone looking to take their trading to the next level as well as beginners. They have comprehensive educational resources on both the website and the app to help you learn more about trading. They are regulated by the Financial Conduct Authority here in the UK and they pride themselves on transparency and a reliable service. They also have a strong Trustpilot score, making them a solid choice. XTB are now offering zero commission on stocks with over 5,400 available to trade, with over 781,000 customers on a world-class platform. To give them a go, check out the link in the description to download the app. The next thing I would 100% change is I would take less risks, or at least ones that are more calculated. While some of the personal risks I've taken have done very well, like my jewelry business and my own web design business, risks when it comes to investments I think are a complete waste of time. I struggle with this in particular as I am a bit of a risk taker. Whether it's buying and selling stocks, cryptocurrencies, copy trading, investing in software, art, I've tried a lot. And honestly, while some did well, it was a waste of time and money. I'd have been way better off investing that time and money elsewhere. All you really need to do is put money in an index fund and that's it. Set and forget and focus on real things that will actually make you more money. This is something I wish I would have realized earlier in life. Investing is all good and well. You should have it set up, but you shouldn't just be focusing on it. It's great to check the news and keep up to date with the markets, but the real key is making money, which you would think seems really obvious, but to me at first it really wasn't. I mean, don't get me wrong, it's great getting a 10% return on your 20,000 portfolio, a 2k profit, but then when someone comes along and says,
I've maxed out both of mine and my wife's ISAs, and our SIPs, and our kids' junior ISAs. Any suggestions on what we can do with the rest of our money? We've already maxed out premium bonds.
You can't help but look and think, what? And while I've been lucky enough to do reasonably well, that has tapered off to an extent. When I was younger, I was earning more compared to people on junior salaries. Okay, I didn't have a pension, which was a downside, but as I've gotten older, people's salaries have increased and mine hasn't moved particularly upwards. I can't complain at all, but what I didn't do is create a tangible business that I could eventually sell. In retrospect, the real benefit of becoming self-employed is having that capability to one day build up a business that you can sell, which will set you up for life, which being a self-employed web designer certainly doesn't get you to that. I would have been far better off building some big web business that I could sell with assets, which was a big mistake. I think it's no shocker why people with big investment portfolios who achieve financial freedom are pretty much all high earners. Actually spending your time planning how to make more money is definitely a great way to invest your time, rather than just trying to outperform the stock market, or in retrospect, sitting there checking your investing app. Set that up and focus on making more cash to invest. And I think this ties nicely into my my last point, which would have made one of the biggest impacts on my whole portfolio, which is if I would have started this YouTube channel sooner. I started just over 2 years ago, but I could have easily started 10 years ago. Funny enough, I actually had a little YouTube channel about RuneScape back in the day. I'm currently trying to level my farming up to 99. But I just lost interest as I didn't think the audience was big enough. Yeah, I was definitely wrong. But now when I look back at all the time I could have made videos, I mean KSI, one of the biggest YouTubers in the UK, just stole the name of a Halo 2 clan that I was in.
What is KSI? I just stole it from a Halo clan.
I could have easily started before him. Not saying I would have been as successful, and obviously I wouldn't be him by any means, but I could have certainly done a lot better starting back then, and it definitely was the biggest opportunity that I missed out on. Even now in this financial space, I started way too late. There's way more competition, and people that I've been investing longer than are way bigger than me. Likewise, I'm sure there's people who have been doing it way longer than me who are still smaller. And the reason I didn't do it? Confidence. I took so many risks in business, but I really cared too much what people would think of me when I made a video. I really owe it to my girlfriend who pushed me to do this channel, or I never would have done it, which I'm so grateful for. And what's crazy is, literally whatever business, side hustle, anything you want to do now, there's a power to go viral in weeks now on all of these platforms. It's just you probably don't feel confident enough to do it like I did. But the truth is, no one really cares. And once people find out, give it a month, everyone will forget. No one has ever recognized me in real life outside of YouTube as much as I would love to meet someone, and my confidence and my ability to speak has increased tenfold from doing this, as well as giving me a pension. So if you're thinking of doing a business or a side hustle, there's honestly more to lose by not doing it than actually trying and failing. If you do fail, no one really cares. It will only benefit you. I hope these tips have been useful and inspired you. If you feel inspired to start your own online business, check out these ideas right here, or if you want to see my biggest investing mistakes where I reveal exactly how much I lost, check out this video right here. Thanks.